Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 4, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have what's called a follow-through day to yesterday's gap down and recovery to the moving averages, the convergence of moving averages. Today was a follow-through day, making a new high from yesterday's high, and by the way, closing above yesterday's high, above all the moving averages. The trend is in fact your friend. But wait, there's more. There's a couple of things going on that we should bring to the forefront. We have a potential lower high situation. So let's say the market creeps up and is not able to get above this trend line. That would be a second hit of a trend line, a third or lower high situation, rejection de jour. That's one possibility. Remember, we're the umpire calling balls and strikes. Let's look at another pitch. What happens if I think in terms of an ABC type of situation? We have an A leg up, a B leg down. Now this could have been a B leg and a C leg going back up this way to make new highs, but they didn't do that, so they made a new low. So we can call this so far a leg B low, and leg C would complete above the high of the A leg above this price here. That would be an official ABC pattern. So that is on the table. That's the bullish scenario. There's a bearish scenario. There's a bullish scenario. Above all the moving averages, the trend is your friend. You go out a time frame to the weekly chart, and the dominant thing to the daily chart is the weekly chart. The dominant thing is being above all the moving averages on a weekly chart and a daily chart, and therefore the trend is your friend. You look at the weekly chart and you simply say, there's nothing wrong with the tape, period, full stop. That's the assessment of what's on the tape today. Can they get right back below the moving averages, the 50 and the 20 period moving average right up here? Can they get back below that tomorrow? Yeah, let me give you an example of one way how. Here's Google. Google reported earnings after the bell. Here's the extended hours version of Google. And you can see here taking a dump. You go over to the SPY. Here's a 15-minute chart. I wouldn't call it a dump. I would call it a pullback a little bit. Here's the futures chart, the ES chart. And you can see here, I wouldn't call it a dump. I would call it a pullback after the bell. With the Google earnings, what a great excuse. For these videos, we're focused on big picture in terms of the assessment of where the major market in the S&P 500 is, and where they are right now is above all the moving averages. Trend is your friend. They recovered the gap down yesterday. Another potential situation, again, keeping on the umpire theme, you have a gap down and an attempted recovery, lower high. You have a gap down, attempted recovery. We don't know whether they will put in a lower high, but it's on the table right now. You have a pattern situation brewing. We'll see how it pans out. Let's take a detour. What about Dow? Buy alert yesterday, 36.69 on the dump out, the gap down opening. And guess what? Sell alert today, up over 4% in one day. We have traders that trade these with options. When something like this happens in one day, they get what's called a mini bonanza for themselves. Lazy swing trader, automagical algo system. This is a picture of the closed positions. You see here the first profit target taken in Dow. It was now a risk-free, emotionless trade. We have more price targets along the way as the stock moves up. You could see here, this was a short trade that was closed out yesterday. And base hits put you in the Hall of Fame. Look at the gains and losses here. Not tremendous, but there's a ton of base hits. And when these happen quickly, most of them do, a week, 2 weeks, days, a lot of times. Traders that trade these with options get paid accordingly. Some of these are nice gains in just a matter of weeks. December 19th to January 2nd, 11%. We do take some losses. When we do have to take losses, we keep them small and fast. There's not that many losses. There's a 4%, another 4%, another 4%. We have a system. There's a method to the madness. Hold on to your capital, get a bunch of base hits, and go about your business. You never know when the triples, doubles, Whopper Juniors, Grand Salamis will show up. Lazy swing trader, automagical algo system, closed list. What about inside the numbers? It was a grinding turnaround Tuesday type of situation. Slow tape, lighter volume, low participation. Let's get started with the pivot, 596.40. Right of the vertical is today's activity. You see the pivot down there at 596.40. They never got to the pivot. They started grinding up right away. Let's see what other stuff we have on the board. You remember what a pivot is where the market is either bullish or bearish from the get-go on the onset of the trading day. We use the pivot, it's kind of like the middle of a seesaw. That's called the fulcrum. The pivot is a fulcrum, so to speak. 598.55 is overhead resistance in a place they would normally get tested if she turns green this morning. As you could see, it was in fact tested early this morning. Right out of the gate, instead of going to test the pivot, she went up and tested the next number up in the sequence if above the pivot. Let's see what else we have as the day gets underway. What's the scoop? This is 8:45 a.m., long time before the market even opens for business. 598.55 is important. You knew that from earlier. Above on candle closes opens the door for a leg higher. First to yesterday's high around 629, which is now the gateway to the next thing, which is the gap at 601.85. And as you can see, your numbers up on the board, 640. Or 29, pardon me, and then 601.85. Targets and overhead resistance, as you can see. Look at the 601.85 all the way up here. Overhead resistance comes back down to the 629 area, then goes right back up to the 601.85, closing pretty much around that number by the end of the day. It's nice to have your numbers listed before the opening bell. Pause the video, read the notes, go back to the charts, and double check the work. It's all in here, all the numbers, the commentary you need to be successful trading in the S&P during the trading day. Options, futures, options on futures, micros, exchange traded products. It doesn't matter. They're all directional trades with the S&P. Don't forget about the list of support and resistance numbers on the board. Snap them, put them on your board, put them on your charts. Go see how price reacted around some of these numbers. It's pretty amazing. What's going on over in Camp IWM, my favorite market leading indicator, trying to recapture the 100 period and 50 period moving averages. They did that, trying to get back into the same scenario from before, where they were eating time off the clock, building energy to make a move higher. So they've recaptured into this zone, this channel here. We'll see if they could sustain price. Is it a one-day capture or is it an all-out recapture? And by the way, and a breakdown and a false breakdown situation, if they recapture this and start to break out, watch out above, because they will run them, as they say in the trading parlance. Quite a different weekly chart, I would say, from the SPY. So here, they're trying to now recapture the 20-week moving average that they got below yesterday, closed on top of, right on it last week. But look where they are in relation to the former highs. You take a look at the SPY, and they're flirting with the old highs or the former highs. So let's just get these lines off, have a clean chart, and you can see here with the S&P, they're pretty much hanging around the old highs, above all the moving averages. Nothing wrong with the chart. Trend is your friend. My favorite market leading indicator, you go over to Camp IWM, and the old high is all the way up here at 245. We're down here nowhere near the former high. So that's interesting information. That's of note, and it's a puzzle piece, and it's on the table. That's a pretty big, like large marge type of divergence. What about the folks down at the transportation department? They had what's called an inside day. So the positive is they stayed above the 200 period moving average, fair enough. The other side of that is they didn't really do much. They didn't change the structure on the chart. Nothing's going on that we can make heads or tails of from today's activity other than the fact. And by the way, it was an on-time type of situation and you got to bounce. And we'll give that a funny how that works for those of you that understand that concept. Second favorite market leading indicator, and you can see here from a weekly chart perspective and also compared to the IWM, looks similar. My two favorite market leading indicators. Note that down. Think about that for a moment. And then you go back to the spiders and you say, well, there's nothing wrong here. But your leading indicators are saying otherwise. Now, nothing happens overnight. Nothing happens in one day. But we are looking for, and I say this almost every day now, we're looking for a February-March low situation. So yesterday might have been a one-day wonder for a while. Maybe there's more to come this week, next week, 2 weeks from now. Whatever the case is, we're looking for a February-March type of low, and we're looking for more downside. And my two favorite market leading indicators are saying the same thing. By the way, I would write that down, put it on a sticky note. What about the Q people? Nothing wrong here. Above all the moving averages, trend is your friend. It's really the same conversation that we had with the spiders. There's no difference here. As long as they're above these moving averages, you had a follow through day. There's nothing wrong with this other than the fact that you can be in a lower high situation. You could take it from here and just say, hey, above that trend line, she's going to start to break to the former high and then potentially to new highs. But if she's contained by that trend line, that's a different story. And then you can take the trend line from here and say, well, what about this? And you say, well, yeah, I got that too. This is part art form, part science. Nobody has a patent on which trend line is proper and improper. What about the XLF, the financial complex? The blue line represents the area which they tried to break out from, meaning the former breakout area, false breakout, came back down. We'll see what happens. Are they going to get back over it? That's extremely bullish, uber bullish, as I like to say. Or are they going to build some kind of a bearish situation sideways, eat some time off the clock, and come into these moving averages? We'll see. It's an open item just now. SMH, pretty good proxy for the tech space as a whole. You have a divergence again. You have a divergence in the IWM, my favorite market leading indicator. You have a divergence in the transports, pretty good gauge of the economic activity, even globally and here in the US. It's a good market leading indicator as well. My second favorite, a number one canary in the coal mine. And smash mouth, as I like to call them, the semiconductor space, SMH for the exchange traded product. That's a pretty good proxy for the tech space, and without the semis, the market really isn't getting very far. Here's your weekly chart in the semis, and they have to recapture these moving averages to make it happen, Captain, as I said last night. And if they can't, then this is confirmed as a bearish, wedgish type of situation in the making. A little sloppy-ish, but it doesn't really matter. You can make this look like anything you want. I can make it look like a bear flag, a bear wedge, some kind of triangle-ish situation. I can make it look any way I want. What I do know is if they can't recapture these moving averages and this thing starts to fall away, look out below. Irene's coming to dinner, and she's staying in the guest room. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense and Market Analysis.